Time now to take it across to a big exclusive ET Now interview with none other than John Nelson, Global Chairman of Lloyds. And he's in conversation with ET Now's Ashwin Mohan. Ashwin, all yours. Take it away.
Thanks for that, Krishna. Thank you so much for taking out time and speaking exclusively to ET Now during your India visit.
It's a pleasure.
If you could start off by telling us how important is the Indian market for you, and in terms of your growth and expansion plans, where do you see India figuring as a market in your global pie?
India for us is an extremely important market. If you look at the demographics, economic demographics of the world, you can see that China, India, maybe Brazil are going to be transformative in terms of the world economy. They already are having a huge impact. And I think that the potential for India in terms of insurance is great. So we take India extremely seriously as an economy, as a country, and in terms of what we can add and provide to that Indian economy.
All right. Clearly, you want to get a share of the rising middle-class population and also the kind of penetration that population will offer to a reinsurance market like you. Now, in terms of setting up an Indian branch, what's the update over there? You've been in talks with the regulator. Can you give us a sense of when commercial operations are likely to begin?
Yes. The Insurance Amendment Act was passed over a year ago. The regulations included a chapter for Lloyd's so that Lloyd's can operate. Remember, Lloyd's is the only insurance market in the world. It's the global hub for specialist insurance and reinsurance. And in terms of Lloyd's, therefore, we needed to have special legislation to allow us to operate, which has happened. The regulator have now published regulations for Lloyd's, which we are content with. And we've made a formal application, and in talking to the regulator I would be optimistic that we can start our actual operations very early in 2017. We've already set up an office here. We've appointed our Chief Executive for Lloyd's India.
All right, so clearly you are all geared up as far as starting your Indian branch is concerned.
We are.
But this is quite a competitive market. It's dominated by several domestic players. You have almost a monopoly in the form of a player like GIC. How does Lloyd's look at taking on competition from these domestic behemoths?
Well, it's not really about competition. What this is about is that India has got a high-class problem. You have got one of the fastest growing economies in the world, the fastest major growing economy in the world.
But you have to battle these domestic players for market share.
Yeah, hold on. So we have that great strength in the Indian economy. Secondly, we have growing risk being created and asset values being created because of the industrialization and commercialization of the Indian economy. The Indian economy is extremely sophisticated. And thirdly, you have growing urbanization, so you have growing concentration of risk. What does that mean? That means that the demand for insurance, direct insurance, in India is very, very substantial over the next 10 or 20 years. If I look at insurance penetration rates in India, they are the lowest of any major economy in the world. They're less than a sixth of where they should be in terms of developed countries. They are less than half that of China and less than half of that of Southeast Asia, to bring it closer to home.
So there's a lot to be tapped.
So there's a lot to be tapped. Now, the key here is reinsurance, because reinsurance can support the growth of the domestic Indian insurers and insurance industry. Firstly, by adding capacity. Secondly, by widening the product range that's available to the Indian insureds, by supporting those companies to write risks that at the moment they don't have the experience to write. And thirdly, very importantly for a country which is so catastrophe prone, floods, we've seen it in Chennai most recently, it is extremely important that you diversify risk outside country. At the moment, if you have a major catastrophe, to the extent that it is insured, most of it is insured within India. So the burden falls on the government for the uninsured portion and on the domestic insurers for the insured portion. So you have all this risk retained within India. Now, if you look at other economies, like the United States, for example, you will see they deliberately diversify their major catastrophe risk outside country. 60% of US catastrophe risk is insured outside, and that allows the economy to be sustainable and to recover after disaster. And that is what we're aiming to do in India.
What's the major growth driver that you foresee in India as far as your business is concerned? Which segment are you betting on the most?
Well, we're betting on a number of segments under what I call the specialist heading. So we specialize in business-to-business risk and in catastrophe risk. So our biggest classes traditionally are property, which would be catastrophe risk, but very much also some liability classes, casualty classes, and then if you look at, very importantly, some of the emerging risks and newer risks, so supply chain interruption, terrorism, and then of course cyber. Those are the kinds of risks where we think we can really add to the Indian insurance space.
Now, if you look at the Indian regulatory environment, more specifically talking about the regulator, which is the IRDA. You've been in discussions with the IRDA. What are your expectations in terms of there being a more facilitative atmosphere for global players like you to enter this burgeoning market?
Well, I think they are, and they have been encouraged by the government and indeed by the Insurance Amendment Act that went through Parliament a year ago, or over a year ago. They've been encouraged to adopt a progressive attitude and approach, and they have. And they very much get the point and the principles that I've just outlined to you. I think that what they have published in terms of regulations for international insurers going forward goes a long way, but I think we would, to be quite frank, would like to see full liberalisation so that the reinsurance market is open with a level playing field. The regulations we have don't quite get there, but they are. It's a good step forward, and certainly in discussions with both the government and the regulator, they see the benefit of further liberalisation.
So, since you're talking about full liberalization, clearly you're talking about a situation wherein overseas players can come in and pick up a 100% stake or say a majority stake in the Indian domestic institutions.
I'm talking about reinsurance, not insurance. Yeah.
Absolutely.
Yeah,
all right.
yeah.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.